Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always at this time on a Monday morning, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, TheKouk.com, and on X using the handle The Kouk. Stephen, good morning.
Good morning, Sean.
Now, tell me, what's it like to be an economist on the first Tuesday of the month and not have a Reserve Bank board meeting to listen to get excited about? That was the first one last week, wasn't it?
It was the first one of this new timetable for RBA meetings, and it was very odd. It was very strange. So first Tuesday, 2:30 Eastern Time, normally when the RBA would put out their statement, but alas, there was nothing. So what we've got to do is wait till next week on the 19th of March, 2:30 p.m, and this is where we've still got to get used to this new change too, that will not only be the decision on interest rates, but there will be a major update on the economy. The RBA governor will give a press conference. So that's all the stuff that we've got to look forward to next week. But we'll preview that next week, I'm sure.
We will indeed. Last week, GDP was the big one. What do you make of it? I mean, it's sort of a sluggish economy at the moment, but not the worst possible thing.
Yeah, it's one of those ones. It's bad, but it's not horrible. I know that sort of might sound a funny nuance, but we've clearly had the economy slowing down under the weight of interest rate hikes, under the weight of a slowing global economy. We shouldn't forget that, particularly China, which is going through a period of genuine deflation and weakness. So our GDP number 0.2 for the quarter was one of the weakest ones that we've seen outside the pandemic time, which of course had a whole lot of strange economic data. But we know that the Australian economy, on average, should be growing at around about 0.7 per quarter. So if we were to wave our economist's magic wand and say, what's the ideal growth rate for Australia? Say, if we got 0.7 quarterly GDP, quarter in, quarter out, we'd be doing pretty well. That's not too hot, not too cold. So the last three quarters have been 0.5, 0.3, and now 0.2%. So we've been growing below trend for the best part of a year. And so those GDP numbers confirmed what we're feeling from the consumer sentiment, the business confidence numbers, that the economy's weak. And when the economy's weak, guess what happens to unemployment? It's trending up, which is what we've been seeing. And importantly, inflation's trending down, which is one of the reasons why the RBA implemented tight monetary policy, slow the economy down, get inflation down. So we're doing this transition through the economy right now.
So it's all sort of working and economics is working, I suppose. When do you think the Reserve Bank will start thinking about cutting interest rates? Because that is the big debate at the moment.
Oh, and that debate only hotted up with those soggy GDP numbers last week. And look, there are, as everyone knows, there's 101 or maybe more than 101 moving parts to the interest rate question. I think that when the RBA do meet next week, they'll be moving away from, we might have to hike interest rates, more to a neutral to slightly opening the door for a rate cutting scenario. But at this stage, it looks around the middle of the year, we'll probably have enough information that the economy continues to be sluggish, that the unemployment rate's heading to 4.5%, that the inflation rate's continuing to come down. And of course, we'll get the lead from global markets. And last week we had the Fed chairperson, Jerome Powell, chatting about, yes, they're going to cut interest rates, but not yet. And while we don't move in lockstep with the US, they're a pretty important part of global markets, pretty important part of what we do here in Australia too. So the RBA probably looks at our own data. Of course they do. But they'll be having an eagle eye on what's happening in the global economy too, to see when the ECB, the Federal Reserve, and others will be starting to trim their interest rates.
That's a great segue into this week, because before we get to the domestic stuff, we do have US inflation and retail sales figures. Is that right out this week?
Yeah, domestically, we don't have a lot of top-tier news, I think it's fair to say. So all eyes locally, in a sense, will be what's happening in the US. And, the inflation numbers, the consumer price index, and the retail sales numbers will be looked at for the growth and inflation story from the US. And the US markets, they'll be potentially very volatile. If we get an outlying number or something outside market expectations on inflation and the retail spending numbers, then of course markets will be gyrating because they'll reprice when the rate cutting cycle will start. So we'll be looking at that. And to be fair, hopefully we get okay retail sales. We don't want a recession in the US, but we get that inflation rate continuing to track lower.
Okay, so and then domestically, not exactly top tier, but the NAB survey is interesting. Business conditions and sentiment, and given the GDP last week showed that business investment is still okay, that's kind of relevant. And then Westpac's consumer sentiment.
Yeah, indeed. And then they have a survey we've discussed over many a long day. It's a good survey. It's contemporary. It includes the sort of sentiment of the business sector right up to the last couple of weeks. That's when they do their survey. So we'll know whether businesses have still got relatively upbeat. And, one of the interesting things about the NAB survey was that it was really quite resilient through to a couple of months ago, that the business sector was sort of, unlike consumers, pretty upbeat about the economy. Now, as the economy slowed down, the business sentiment's tilted a little bit lower. Expectations for employment, for orders, for exports, and these sorts of things have also tilted a little lower. So interesting to see whether that's continued to soften. If it does, or if it has, then of course that adds to the rate cutting scenario here in Australia. Consumers, we consumers are still under the pump, as the Treasurer likes to say. That said, the prospect of tax cuts, the fact that real wages are now increasing a tiny smidge, might just be the issue that gives consumers a little bit of a shot in the arm. And the fact that the stock market's hitting record highs and house prices are still going up, the wealth effect is pretty powerful too. So maybe consumer sentiment will be a little bit more positive than it's been for the last few months.
Stephen, enjoy your week.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.